How's it going, everyone? Mario here. We have a lot of stuff to go over on this video. Without further ado, let's get started. Is a hurricane coming over to visit US? Metaphorical one, of course. 2 weeks back, we had Jamie Dimon, CEO of Chase, came out of the woodsheds with the shareholder letter saying there are some storm clouds ahead, but economy is still strong. That propped up the stock of JP Morgan and the other financial sectors to a massive extent. Everyone was happy, market jerked off, we pushed higher. This week, Jamie Dimon had the post-nut clarity. He said, it's not just a storm cloud, the hurricane is coming to US economy.
It's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And it's you better brace yourself.
Well, he just doesn't know if it's a regular tropical storm or a superstorm Sandy. He flip-flops faster than Meet Kevin. Another example to not to trust banks or politicians and what they say on certain things. If you do, you'll be the last one standing with your pants down. We not only had this shock from Jamie Dimon, we also had a very strong jobs data on Friday. We had an interesting data. Job markets are still strong for now. Unemployment numbers are still low for now. For the demand to slow down, Federal Reserve wants the job markets to get hit and the unemployment numbers to go higher. As harsh as it might sound, that's how it is. Increasing the unemployment rate will cause demand reduction and thus thereby bringing down the inflation. But for now, things are not working out so good for them. Just kidding, they never have. Job markets will get hit in upcoming months. We are slowing down an economy. Layoffs will follow. Tesla kickstarted the layoffs this week. Other big tech oligarchs will follow the same to keep up with the profit margins. That's a terrible thing, but all I'm saying is be prepared for the worst so if it happens, you can be ready. It's better to be a warrior in the garden than a gardener in a war. Leading into next week, we have CPI data. Interesting week indeed. I have been strong about my opinions on this topic of inflation in my previous videos. You don't have to look at the data, just have to go out to the nearby stores to see the prices for yourself. Gas prices hit new highs, food prices are still going up. As the energy prices go higher, the prices of the sectors which are dependent on the energy will be going higher as well. We will be keeping an eye out for CPI on Friday, but first we will go over the technical analysis on SPY. SPY had a range-bound week from $416 to $407 down south. It is easier to find the direction of the markets leading into next week. Breaking above 416 opens doors for much higher prices up north, and breaking below 407 means we are looking for much lower prices to come. Looking into the weekly charts, we have an ATR of 1733, which means from where we are sitting right now, we can push all the way to 429 up north if we have a 1 ATR move. And to the downside, we are looking for 393 if we have a bearish week leading into next Friday. How to figure out if it's going to be bullish or bearish? As I said before, pretty simple. To dig deeper, we will dive into the daily charts. Last week, it's range bound, 416 to 407. On Thursday, they had this fake out operation. They closed candles above 416 only to reverse all the way back on Friday. So for now, the range is still intact, 416 to the upside and 407 to the downside. So what will happen if we take out one of these ranges? So let's say bulls pushed all the way higher and starts closing candles above 416. Keep an eye out for closing print on Thursday, which was at 417.45. If we take that out, we can easily see $420 and a test to 50 SMA up north, which is currently sitting at $423.90. Breaking above the 50 SMA, it opens doors for our weekly target, which completes the 180-hour move at $429. If we break below 407 to the downside, we can see 405, and below 405, it opens doors for 403 to 400 zone. Below that, we are looking for 397, and below 397, which means 395 and 390 will follow real quick, which will also complete our weekly 180-hour move. Remember, these are weekly ATRs. ATR is just an indicator and it's not 100%. But with CPI in sight, we can expect some big moves leading into next week. Focus on the consolidation range which we are having right now. Breaking out or breaking down will give us the idea on how the week is gonna go. As always, members of the Discord and members of the Patreon will get daily updates on SPY and QQQ and different trade ideas that I'm watching on a daily basis before market opens. Go ahead, check it out, link is down below in the description. Leave a like and subscribe if you enjoy the content. As always, take high probability trades, manage the risk wisely. I'll see you guys in the next one.